Welcome to another edition of Cattle Call. I'm Susan Littlefield on the Rural Radio Network, being brought to you this week by FNBO, the Great Big Small Bank. First and foremost, my apologies for my voice. I have completely misplaced it. I'm thinking it's because of watching a football game this weekend, as I'd like to blame it on. Unfortunately, that isn't the reason. But we are going to look at a variety of different things that have happened. We're going to do a quick rewind to 2024. I'm going to put Brad on the spot to get his thoughts on what some of the biggest highlights were. But we're also going to talk about where we're at cash-wise, and really, is there going to be more cattle available come January 1? We've got a lot to unpack in this week's episode, a holiday episode as well. But first and foremost, Brad, Merry Christmas to you and your staff and your family there at KKV Trading.
Well, thank you very much. Thanks for having me on. And yes, Merry Christmas to you and your family, and to people that are, for some reason like to watch your program. So yeah, it's a great time of year. I'm looking forward to having grandkids back home as well. We'll play next week by ear. We're taking the kids out for a few days, so but I'll be back. See once exactly the next time we do this. It might not be next week, but one of the guys from here will certainly fill in for it. That's for sure.
Yeah, we'll have Scott step in for you for next week. Let's reflect, first of all, on 2024. Since we're into this holiday season, everybody kind of talks about the year.
That's a good question. It's been an interesting year in terms of, for me, it was a year where somewhat the unexpected happened. I thought that we would certainly by now change some of this percentage of heifers on feed. Long cycle liquidation. Sorry to bore you if that doesn't make sense to you, but we've never seen, at least, when you look at cycles like this, one take this long, to go through the whole liquidation thing. If you think back, you can go back a long, long ways, right? To the liquidation phase of, I think you have to even include September 11, coronavirus. I could even argue that things changed way back with mad cow disease. That's a long time ago. So anyway, I thought surely by now, we would see some further retention of heifers, which we really haven't. And that was part of the reason why I think a lot of us, fundamentalists were fundamentally bullish. And it turned out that, hey, even with having to feed a ton of heifers, we still ended up with a fantastic market for the most part for the year. One of the things that we did change in last year, Susan, was that we dropped off on the cow slaughter, nearly 18% below a year ago after back-to-back, but especially back-to-back years of huge cow slaughter. So we have stemmed that. We have slowed that down. And I guess the other thing moving forward is, about every other program or show that I sit through for these things, there always seems to be that demand question, so, sometimes the smart aleck part of me, the sarcastic part of me says, well, look at beef production. It really wasn't down very much from a year ago because the weights were so big. The overall supply was down a little bit, but the beef production was not down very much because of our record weights. We rallied. Part of the reason we rallied is demand. The function of demand, the whole thing of demand on cattle to me is interesting, Susan. It's different than it is for corn. Okay. It's, or whatever, anything that's a storable, non-perishable product. You put it away in the bin and there it sits. That's how many bushels you put in there, and that's how many bushels you're going to take out, right? Cattle, totally different deal. The measure of demand to me is how much can you sell at how high a price, right? And so I don't know, these guys that can magically predict when the demand is going to get poor, they're a lot smarter than I am. And frankly, I don't think that they know, but we'll see once coming out of New Year after the holidays. We'll see what demand feels like. After that, my expectations is that they'll be surprisingly decent. So
we'll take that. What about the cash? I know last week as you and I were talking, the thought was the cash should be probably better in the South, which it was. But where are we at spread-wise when we look at the North versus the South?
We saw the North, slow up just a tick. A week before we got 196, relatively easy. and cattle that hauled a long ways before they were slaughtered too, by the way. Last week, Friday, we kind of limped into the end of the week with the 195 steady to $1 lower. I thought that we might narrow that spread between north and south because an awful lot of those cattle had a lot of freight on them going all the way down there. And that's what happened. There was a little bit of 192 that traded later on Friday in Texas. So a couple of things in play here. One of them is choice select spread and the chasing for grade, the looking for grade. Cattle grade better here in the north, and so that's some of it. I guess the cash in the north felt like we got 2 weeks in a row where you've got a holiday on a Wednesday. You're gonna have 2 4-day kill weeks, if that, hardly, some different kill schedules. So the demand for the cattle isn't quite as great as it had been before that. Conversely, I would think the lighter kill is going to firm up the box beef market because there's less supply going into the channel. So if we weren't so current in the north, I would maybe be just a little troubled, but I apologize. I'll give you one of my quotes again that, you can believe it or not, but, my little Post-it note stack over here, the beginning and the end of all markets start in Iowa. And if you're from Nebraska or Kansas, you're going like, yeah, he doesn't know anything. And maybe I don't, but my point of that is not necessarily that Iowa has invented cattle markets, but it's Iowa that still has 50 to 60% of the cattle are negotiated. And we have a tendency to be a problem. We get backlogged. We're not current. We got big cattle. We can't get rid of them. So we're the reason that the market's in trouble, but we also get to be the reason why maybe the market's better than expected when we're pulled forward and current. I can give you an example after of yearlings that are already sold before Christmas. Very unusual. Weather's been good. The market's been good. Those yearlings were high when we bought them. Can't wait to get rid of them. They're going to actually make a little money. We figured they were going to lose money the day we bought them. And so from a supply side or standpoint, I feel great about what the position the north is in.
And to say how beneficial this weather has been. I mean, as you and I talk on Christmas Eve, there has not really been any adverse weather issues this year.
No, not at all. And if we get some of that, they'd knock some of this discount out of the fed cattle. I mean, typically February cattle would be often a premium with that built in, what if we get some weather? And now we're trading, $6, $7 underneath the cash in the north, at least. So, one of the things the weather has done also is it's reduced the cost of gain. I think, when we were plugging in some of those projections in August, when those yearlings came in, we're finding out that, hey, instead of a 193 break even, it's maybe a couple dollars less than that because the performance has been good. So that's also encouraged us to stay current.
So what are you looking forward to into 2025 in this first quarter when you look at this cattle market?
I still feel that the tightest supply that we've experienced lately is in the first quarter of next year. I've been foolish enough to, say on your program that I think, that we're going over 200. I still feel that way. In fact, I could see, I could see a scenario where we have one of those moonshot blow off type top. A lot of markets have had them. I can give you a long list of them. And to me, the cattle thing would maybe be poised for that. Of course, one of those elements would be if indeed here at the end of the year, did we start to hold back some of those yearling heifers? Are we going to find out that there's less supply of the females? The other thing, of course, would be a weather deal. Winter's far from over. If we would all of a sudden slow that down, that might, get you going here too. But I'm wondering this whole cycle thing, unfortunately, boringly, I could talk for 30 minutes on this. I wonder if we're not changing this whole supply picture. I wonder if we're just going to have to get used to less cows. I don't think we're ever going to get our cow herd back to where it was. We're going to maintain beef production because we'll make them bigger and with genetics and all the rest and stuff. But I think from an overall standpoint, supply side standpoint, we're going to have to get used to a different kind of looking herd. And there's encroachment every day on the grass country, of course. So, it should be a good year. It's a year with the challenge for me right here is we're paying so much for replacement feeder cattle that the risk of the famous black swan thing, something you can't anticipate, it's huge. And so when you've got break evens way up here, something weird happens, be careful. I find myself, suggesting and using more put options, more boring strategies like that, more safety net type things than I ever have before, and hoping that I don't need them. Much like buying insurance, right? You don't want to use it either. So be careful. But I think we're in a great spot here from a supply side standpoint for a little while.
All right, Brad, what's the best way for folks to get a hold of you?
712-722-0023, or maybe better yet, kkvtrading.com. You can find out all about us there. Merry Christmas, Susie.
Merry Christmas, and thank you so much for the recipe. I am looking forward to officially making Brad's whole ribeye loin for Christmas for my family. Merry Christmas, and we'll see you in the new year.
Sounds great. See you then.
All right, quick reminder to everybody, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's another edition of the Cattle Call, brought to you by FNBO, the great big small bank, right here on the Rural Radio Network.